Bitcoin is digital capital, right? The world's going to be remade. There's a digital transformation in finance taking place.
Have you ever wondered if Bitcoin could skyrocket to $225,000 by the end of 2025? Sounds bold, right? But what if I told you that some of the biggest players in finance and technology are betting on exactly that? Today, we're diving into one of the most exciting and controversial predictions in the financial world. Could Bitcoin really break records and reach new all-time highs? What's driving this optimism? And should you be paying attention? Welcome back to Cryptic Tech, your #1 channel for breaking down blockchain. Stick around as we break down the facts, analyze the latest trends, and reveal the key factors that could make or break Bitcoin's path to $225,000. Whether you're a seasoned investor or just crypto curious, this is one video you won't want to miss. Bitcoin has always been known for its volatility and explosive growth potential. From its beginnings in 2009 as a decentralized digital currency to becoming a trillion-dollar asset class, its rise has been nothing short of extraordinary. But the big question on everyone's mind is, how realistic is a $225,000 price target by the end of 2025? Historical patterns and Bitcoin halving cycles. To understand Bitcoin's future, it's essential to analyze its past. Bitcoin's price historically follows a 4-year market cycle influenced by halving events. For those new to the space, a halving is when the reward for mining Bitcoin transactions is cut in half, effectively reducing the supply of new Bitcoins entering circulation. This event happens approximately every 4 years and plays a significant role in shaping Bitcoin's supply dynamics, which in turn affects price. The most recent halving occurred in April 2024, dropping the mining reward from 6.25 to 3.125 BTC. Historically, halvings have driven Bitcoin's price up dramatically. After the 2020 halving, for example, Bitcoin skyrocketed from around $8,000 to over $60,000 in a little over a year. Similarly, following the 2016 halving, Bitcoin surged from $650 to nearly $20,000 by the end of 2017. This cyclical price movement is part of what has made Bitcoin one of the most talked about assets of the 21st century. The price surge after halvings can be attributed to simple supply and demand dynamics. With fewer new Bitcoins entering circulation, scarcity increases, often driving prices higher as demand remains steady or grows. Now, with the 2024 halving behind us, analysts at H.C. Wainwright predict Bitcoin could reach $225,000 by the end of 2025, driven largely by the same principles of scarcity and increasing demand. This projection isn't just speculation, but is backed by observable patterns from past market cycles. Regulatory landscape and policy shifts. Another crucial factor that could drive Bitcoin toward the $225,000 mark is regulation. In 2024, the U.S. administration shifted towards pro-crypto policies, unlocking new opportunities for growth. President Trump's re-election brought about a more crypto-friendly atmosphere, as his administration pledged to make the U.S. a global hub for blockchain technology and digital assets. One of the most significant moves was the appointment of former SEC Commissioner Paul Atkins to lead regulatory efforts, along with venture capitalist David Sachs as the newly appointed crypto czar. These appointments are seen as a sign of the administration's willingness to foster innovation and provide clearer guidelines for the cryptocurrency industry. The administration has promised to establish a national Bitcoin reserve and streamline crypto regulations, fostering innovation and driving market confidence. This level of regulatory support is unprecedented and could significantly accelerate Bitcoin's adoption. Clearer regulations not only reduce uncertainty, but also encourage large-scale institutional investments, which were previously held back by regulatory ambiguity. Perhaps the biggest development of 2024 was the approval of spot Bitcoin ETFs. These allow traditional investors to gain direct exposure to Bitcoin without holding the asset themselves. This move was a game-changer, attracting billions of dollars in inflows from pension funds, hedge funds, and retail investors alike. By simplifying access to Bitcoin, ETFs open the door to new levels of market participation, which can drive prices higher through sheer volume and liquidity. Institutional adoption and market expansion. Institutional adoption is one of the strongest drivers of this bullish forecast. Major financial giants like BlackRock and Fidelity launched Bitcoin ETFs in 2024, solidifying Bitcoin's reputation as a legitimate asset class. These ETFs quickly became some of the most popular investment vehicles, drawing in large institutional investors who previously hesitated to enter the volatile crypto market directly. MicroStrategy, a pioneer in institutional Bitcoin investment, continues to double down on Bitcoin as a long-term asset. CEO Michael Saylor recently called Bitcoin the most secure asset in a volatile world. After the company purchased another $209 million worth of BTC MicroStrategy's consistent investment in Bitcoin has not only increased confidence among other institutions, but also helped stabilize the market during periods of turbulence. Companies like Tesla and Square also continue to hold Bitcoin as part of their treasury reserves, demonstrating that Bitcoin is increasingly viewed as a reliable store of value. This institutional involvement provides a strong foundation for sustained price growth, as large corporations are unlikely to liquidate their holdings quickly, ensuring long-term price stability. This growing institutional demand is a key factor in driving Bitcoin's price upwards. As ETFs open the floodgates for new investors, the market is likely to experience significant upward pressure. Macroeconomic factors and inflation. Macroeconomic conditions also play a critical role in Bitcoin's future. With inflation continuing to pose concerns globally, many investors view Bitcoin as digital gold, a hedge against fiat currency devaluation. The parallels between Bitcoin and gold are becoming increasingly evident, as both assets are finite in supply and serve as a store of value during times of economic uncertainty. In the current economic environment where inflation rates remain high and fiat currencies face devaluation, Bitcoin has emerged as a preferred hedge. The decentralization and transparency of Bitcoin make it appealing to investors seeking refuge from traditional financial systems. This trend is expected to accelerate, especially as central banks continue to print money and inflate national currencies. Bitcoin's role as a hedge against inflation isn't just theoretical. We've already seen significant capital inflows from countries experiencing economic instability. For example, in Latin America and Africa, where hyperinflation is more prevalent, Bitcoin adoption has soared. This global adoption further reinforces the narrative that Bitcoin can thrive as a store of value in uncertain economic climates. Technological innovation and network upgrades. Technological advancements are another critical factor. The Lightning Network, for example, continues to improve Bitcoin's scalability by enabling faster and cheaper transactions. This innovation is vital for Bitcoin's long-term usability as a global payment system. By addressing some of Bitcoin's limitations, the Lightning Network ensures that Bitcoin can scale to meet growing demand. Additionally, improvements in privacy and efficiency through upgrades like Taproot make Bitcoin more appealing to both retail and institutional users. Taproot enhances Bitcoin's ability to execute complex smart contracts, increasing its utility beyond just a store of value. These technological upgrades are laying the groundwork for broader adoption and could significantly impact Bitcoin's price trajectory. Risks and volatility. However, we must acknowledge the risks. Bitcoin's volatility, potential regulatory pushback in regions like the EU or China, and economic downturns could negatively impact the market. While the $225,000 prediction is compelling, the crypto market remains unpredictable. Large price corrections are not uncommon, and unforeseen events can lead to sharp declines in value. Investors should also be wary of technological risks, including potential network vulnerabilities and competition from other emerging cryptocurrencies. While Bitcoin currently holds the top position in the market, the rapid pace of innovation in the crypto space means it must continuously evolve to maintain its dominance. In summary, Bitcoin's path to $225,000 by 2025 is driven by historical trends, favorable regulation, and growing institutional adoption. The future looks promising, but it's essential to remain cautious, stay informed, and invest wisely. As always, the crypto market is full of opportunities, but thorough research and careful planning are key. Do you believe Bitcoin is destined to become the world's next global reserve asset? Share your predictions in the comments below. Don't forget to like, subscribe, and hit the notification bell so you never miss out on our latest insights. Thanks for watching Cryptic Tech, and I'll catch you in the next one.